Hi everyone, it is Nicole Dennis here from theparentpreneur.com, and I put up a post and said, hey, who wants to know my strategy for creating an extra $1 million in my retirement portfolio? So I have put together some slides and some information so that I can give that to you and hopefully help you and get you inspired to plan for your future. I also have a giveaway, so make sure that you watch this video through and so you can participate in the video. If you're watching the replay, put replay in the comments and let me know where you are watching in from, where in the world you are watching in from. So, a lot of people retire with not enough money for their retirement, right? Like I just looked up some statistics here, and these are Australian statistics, and the average 65 to 69-year-old has $207,000 in their superannuation. So this is like a 401k if you're from the United States. I'm not sure what they're called in Europe, but it's basically like your retirement fund. So 207,000 is not really going to get you very far or get you a very good lifestyle. So, I am 44 now. And, last year I was thinking about, how are we going to, and my husband, Justin, and I were talking about how we're going to add some money to our retirement fund so that, we can do things that we enjoy. Not that I ever really plan on retiring because I like working and contributing, but, you might want to slow down and work a bit less at some point, and having that there so that we can do the things that we love and enjoy. Like we love to travel. We love to be able to spend time with our family. I love living in a nice house near the beach, and things like that. So being able to do things that you enjoy. I know Justin would really like to get a new boat one day. So things like that. So we used to have a boat, but we actually sold it when Joy was born because we weren't using it very much. And they are called Bucket Over Another 1,000 for a reason. So I've put together some slides, and anyone can do this. This really is a strategy if you have time on your side. So that's something, if you are a little bit older than me, there's definitely some other things that you can use and that you can do that are going to help, that you can still, put a lot of money aside for your retirement. But I put together a few kind of slides just to make it a little bit easier for you to follow along. So this is kind of like a timeline of, some of the things that happened for us. So in 2012, my husband, Justin, he had a business, a health food store, a natural therapies clinic, which was his dream business, which quickly turned into our nightmare. And in 2012, he actually went bankrupt, and he was really, really sick. And termites ate our house, had a massive tax bill, massive medical bills, because Justin needed a lot of medical support for the challenge that he was faced with. And so, we ended up in a really bad financial situation, like really, really in the negative. Justin couldn't work for a couple of years, and it was very, very, very difficult. And I was working all of the time and really stressed out to try and pay for all of these bills because Justin was unable to work. So the first thing was to get out of crisis, right? So in 2014, we started a new side business. We were paying off our debts and things like that, and just kind of getting out of that situation that we had been in. And then 2017, we had our daughter, Joy, and then it was my turn to have a few challenges. I had a few challenges post the birth of Joy, health-wise. So we're kind of focused on that, and just, in the survival mode that is we can all go into, I think, in life when we've got a lot of pressures on us. And then in 2019, I turned 43. I was starting to feel a lot better after the birth of Joy. And we really thought we want to look at building our finances for our future and things like that. So that was kind of the point that this was coming from. And so I really like maths and numbers. I actually used to tutor mathematics, algebra, calculus, statistics when I was at university. So I really like numbers and charts and things like that. So I was like, I wanted to come up with a plan to be able to add more money to our retirement fund. And that was something that Justin wanted. So I sat down and I did some numbers around this. It's really, really boring. It's really simple and it's really low risk what I've put together. It doesn't involve cryptocurrency or high returns or trading or, being trapped in front of a computer and looking at share charts and all of that kind of thing, because I'm not really interested in doing that, even though, I'm good with numbers. I could probably learn how to do that. It's just not something that inspires me. So I don't want to be doing it with my daily life. So my main business is actually in the health and wellness space. I have a leveraged and residual income through that. And that is, what we fund our life and pay for all of our expenses out of. But I have another little side gig that pays me about $1,000 a month, right? So I have something else that's separate to my main business and it pays me about $1,000 a month. So what I decided to do is that I would take this $1,000 a month and I would invest it. Now, if you don't have a spare $1,000 a month, I'm going to give you some tips of how maybe you can find some spare money to follow this strategy as well. So it's all based on the power of compound interest. So if you read any books on finances, and I've got some recommendations I'll give you as well, this is talked about. So the earlier you start, if you are in your 20s and you start doing this, you actually won't need to put as much in every month because you've got more of time on your side. But, as I said, I'm 44, so I need to, have more. If you're older, it's going to be, you would have to kind of ramp this up. And there's probably some other things that you can do, which I might do another thing on if you're older, to actually really help boost your savings. So what I'm going to do is I already have a superannuation, or what's a 401k in the USA. So this strategy is separate to that. I have that. I put a percentage of my income in there, and that will be a portfolio, that's projected to have a great value by the time we retire. So Justin and I have separate ones because that's how we do super in Australia, and it's just in an indexed fund. I don't really do anything with it. But I decided I was going to be a little bit more active in this strategy. So what I did is I had a starting balance of $10,000 and my annual investment is going to be $12,000, which is $1,000 per month. So as I said, I'm 44, so I started with the $10,000 and I started this last year. And so this is basically a compound interest calculator. You can find a whole heap of really useful calculators on noelwhittaker.com.au to work out your superannuation value, to work out growing an investment portfolio, investing in shares, investing in property, all sorts of things. Really great calculators. So as you can see, by year 22, this would be 719,000. So not quite that 1 million, but I'm going to get to how I'm going to create that. So so this was an annual investment of that amount. So I decided to stick with this amount that's I have from this other side business that, that's just sitting there. I'm just going to invest it. So I'm going to just build a share portfolio is what I'm going to do. And I'm put some rules in place is no more than 10% of the total portfolio value in any single company. Because, you can do well, and sometimes things go wrong with companies as well. So I want to manage my risk in that way. And I don't want to spend hours and hours researching companies. So I'm going to leverage experts to do their research to help me narrow down which stocks to choose from. So someone that I'm following, I actually have a membership subscription, is The Naked Investor. And what I really like about what he does is he's looking for value companies. So it's not buying a stock and then you're going to trade out of it in a few months or 6 months and looking at all of the charts, actually looking at the value of the company, looking at the CEO, the CFO, all of those kinds of things. If a company has great underlying value and potential to have a growth in their share price. So that's what he's done. I forgot to mention that compound interest calculator, I've just done an 8% return per annum, which is pretty standard return if you are invested in the stock market. So it's nothing fancy. It's these super amazing returns, super boring. As I said, boring. And I've picked something that's not super high risk. So anyway, that's what I've done. We've bought 4 different types of shares now. So in our portfolio, looking at these different recommendations. So we've just got them sitting there, and we'll be purchasing other shares as they come up. But maybe you're like, well, how can I find $1,000 a month? So I have a prize. So I'd love to, hear where you're calling in from. Let me know where you're watching this from. And also let me know, if you have a strategy in place, and I will tell you like some tips where you can find $1,000 a month. So I have this book. I have 3 of these books to give away. So if you like or love this video and share this video, you'll go in the draw to win one of these books. So a friend of mine, Rachel Smith, actually wrote this book, Underspent, and she actually just changed her spending habits and saved 38% of her take-home salary in 1 year. So, and Rachel, she like does heaps of fun stuff. She's always out paddleboarding. She like goes on travel. She's like out hiking and doing things all weekend. So this is not about like living a boring life and not doing things that you love, but it's a great book that she's written, and she's so passionate about this for people. So, that can give you some good tips at where you can make adjustments and things like that. So, we travel, like we do loads of things. I should do a whole nother thing on like how I set up I've got all these different bank accounts, but we go away like 4 times a year normally. So we do a lot of fun stuff too. You can also look at how you can generate some extra income, like start a side gig. This is really huge right now. Like my thing our business that is in the direct selling space that we started as a side thing is now our full-time income. Like we have a business that's our full-time income, but you can look at things to create extra income like Airbnb, being on Airtasker, Uber, social selling, network marketing. If you're creative, an Etsy store, there's like loads of things out there that you can do to generate some extra income. You could even do more than one. Like you could do a couple of things, if you have different passions and things like that. I actually know someone, I bought these earrings, shout out for Electric Leo, and she started an Etsy store, and she like sells like earrings all over the place. She has stockists now. So there's lots of different ways that you can earn some extra side income. And it's a really smart thing to do to just create security in your life. These are some resources, other resources I recommend. So remember, like this video, share this video, and go in the draw for this amazing book. You will love it. So good. It's like easy read too. It's really, really fun. So I've got 3 of those to give away. So these are some resources that I really love and have helped me kind of like set things up. The Barefoot Investor. He's like so great, Aussie, down to earth, and also the Barefoot Investor for Families. So Joy is already, she's 4 and she's been over a year doing like the jars and things that he recommends for kids in there. And this is a really great book too, The Latte Factor by David Bark. So he is an American author. So probably some more information if you are in the United States about like specific things of how your 401ks and all of that work, because I'm not really across all of that. And here is a little bonus strategy as well. So, I said I'd show you how I'm going to get to 1 million. So my little bonus strategy is going to show you that. So remember, I've just like based it on the $1,000 a month. So I could, increase that and make this happen faster, make it a bigger portfolio for sure. So how I'm going to add an extra $500 a month to my investment fund in 3 years without changing anything that I'm doing, like without changing my expenses, what's coming in, any of that. So what we just recently had solar power installed on our house. So we had like quite a big system installed. And the great thing is you get some government rebates here in Australia for doing that. And you can also do it through, they have like really low interest loans. So if you want information on that, put solar in the comments and I'll send you the information of who we did that through here in Queensland. So basically, we won't have to pay an electricity bill. And in 3 years, we'll have paid off the solar, right? So we'll have removed our $200 a month electricity bill. We'll have paid out our solar system, and then we'll have an extra $200 every month, right? Now, the other thing we did when we installed our solar is Justin did all the analysis and ran all the numbers. We're a system that's big enough that we can actually have a plug-in electric vehicle. So an electric vehicle that charges off our home electricity system. And we spend about $300 a month in fuel or gas if you're American. We call it petrol or gas if you're American. So we, like do a lot of driving and that's how much we spend. So we've got a solar system big enough that it will completely cover the charging of an electric car. So they're not quite ready yet. We did just buy a new car, but electric cars are not quite there yet to be the main car. But we are planning for our next car to be an electric car, and then that will mean we don't have to pay $300 a month in fuel. And also the great thing about electric cars is they don't need to be serviced as often as petrol cars. So you have all of those savings as well. So that's going to add an extra $500 a month, and we're going to put that straight into our investments. So I've done a chart, I said I'm a numbers person. So after 3 years of just investing that $1,000 a month, based on just that 8% return, super conservative. If we do better, awesome, fantastic. I'll be really excited. Then our forecast balance would be $51,554. And then we're going to increase our annual investment to $18,000 or $1,500 a month. And look at that. That gets us up to just over the $1 million mark through a very simple strategy. So if you're like me or younger than me and you have this time, you have kind of 20 years to start to build a retirement portfolio, this is a great strategy for you to adopt. So I would love to hear, leave me a comment on what you got out of this. And let me know, if it was helpful to you. And remember, if you like and share the video, I'll go in the draw for this Underspent book. I'll draw that on Monday next week. That's the 26th of April in Australia. So I'll draw that and I will send out the winners this little book, which is really, really awesome. So you can find me and connect with me on my Facebook page, which is facebook.com/The Nicole Dennis, or you can also find me on my blog, theparentpreneur.com. Have a great day, everyone, and go out and make a positive change in your life.